Off with that euro dollar sitting at around 128, and we also saw inflation figures coming through in the eurozone, 1.7% year on year in July, and that's from 1.4%, so a slight increase there. We're seeing the dollar losing ground in today's session, slight strength coming through for commodity prices as well, but we did see the dollar strengthening quite significantly last week.
Yes, Eleni, the dollar picked up a lot of steam last week from well above 130. I think the high was about 133.20 last Friday after the non-farm payrolls number. Subsequent to that, we've had the focus shifting to the peripheral countries again in Europe. CDS spreads have widened, equities have come under pressure, and of course the US bond market, well, the global bond market, but particularly the US bond market, has responded, and we've seen a strengthening of the dollar as a result of all of that.
And of course, just looking at those bond yields in the US coming under pressure, so in other words, losing ground. We've been seeing quite a lot of buying in terms of the US bonds, but also just looking here in South Africa, we've been seeing strong inflows into the bond market, not only by foreigners, but by locals as well. Where do we stand right now?
Yeah, we've seen some very, very good demand for local bonds coming out of coming from offshore. I'm not sure of the exact number, but it's somewhere in the region of 60 or 70 billion rand for the year so far. That's very substantial inflow, and of course that's impacted the rand. But more recently, over the last couple of sessions, last few days, we've seen some reports coming out of Europe that perhaps our bond market is a little bit overpriced at this point in time. We have seen some profit taking come through, and of course that's marginally impacted the rand negatively, as I say, very marginally. And the market now sort of adopting a wait-and-see attitude as to equities, because the Fed's assessment of the US economy last week was less than encouraging.
Well, just looking at the fries here in South Africa, it seems they're pricing in a 90% chance of an interest rate cut. It's quite interesting to note that most analysts, most investors out there are expecting a move on the interest rate front. Do you think it's going to have the desired effect on the local currency and perhaps making our yield less attractive?
Yeah, I think, Eleni, global interest rates, certainly in the developed world, are extremely low and look set to remain that way for a long time to come. There's certainly no, besides the wage demands that are coming through, there's very little inflationary pressure as far as the consumer is concerned. So, it's not beyond the realms of possibility that we do get an interest rate cut here. And of course, what's happened in the bond market recently has spurred that assessment on. I'm not sure it's going to have the marked effect that we need for the rand, simply because we're still very, very attractive from a yield point of view as far as the rest of the world is concerned. So maybe we'll have a knee-jerk reaction, but certainly rates are pointing to that fact in that direction, that we may in fact enjoy an interest rate cut at the next MPC meeting.
Well, David, it's also quite interesting to note that despite all the volatility that we've been seeing on the equity front on a global level, some weak economic data out of various economies as well, the rand has not really been impacted because we're sitting around 7.30 to the dollar. Yes, we did weaken late last week, but perhaps not to the extent that we've been seeing weakness coming through with other emerging market currencies as well. Where to from here for the local currency, given that there's just so much optimism when it comes to South Africa?
Yeah, I agree, Eleni. I would have expected the rand to weaken a little bit more, given the unsurety that exists as far as global markets are concerned. However, one thing to note, we have traded marginally below that 720 level, but we failed to close there on a daily or in fact a weekly close now, and that level is becoming a very, very strong support level now. And if we do get some weakness coming through in global equities, and I do expect that to happen, I think then the rand will weaken. Simply from a point of view, there's such a lot of hot money that's flowed into South Africa over the last few months, and if we do get even a little bit of nervousness filtering through in the global economy, I certainly expect some of that money to flow back home. And as we know from history, when all the investors are trying to get out at the same time, that could have a big impact on the rand, and I think it's something to be aware of. Because again, as always, the domestic risks are certainly climbing. Just from an economic policy point of view, we've had the mining sector showing signs of strain. So there's certainly domestic warning signs on the horizon. And should global factors also not pan out on the positive side, then we could have the rand could suffer.
Well, David, let's just zoom into those fiscal worries, perhaps going forward in South Africa. You mentioned some of the mining sector problems, and despite the fact that we've seen so much negativity surrounding the rand over the last few days, we still haven't weakened to the extent that most had expected. Apart from that, we've got wage negotiations, aggressive wage negotiations that are still ongoing, which is going to put us into an even bigger deficit. And this is still not deterring the investors out there, because it seems that emerging markets is definitely the way to go. Do you think investors are going to become far more picky when it comes to South Africa going forward? Because, I mean, if there was any time for money to be flowing out of South Africa, it should be now, given the fact that we've been seeing so much negativity with various tough issues.
I would have thought so, Eleni, and certainly from in my view and our view, you know, a lot of the domestic risks are certainly not priced into the rand, and that's really as a fact of the rand is viewed in a basket of emerging and commodity currencies. So, you know, when you look at South Africa in isolation, perhaps not a lot of confidence building there, but when you look at emerging markets as a whole, and certainly commodity markets as a whole, then South Africa looks quite attractive simply from a yield perspective, and of course what we've seen happening to the gold price and platinum price and other commodities. So, you know, when we lump together in a basket of emerging currencies, then of course things look a lot better. But in our opinion, a lot of the domestic risks are not priced in, and they will only become priced in should we get any global nervousness coming through.
Looking at the broader macro picture that we've been seeing, I mean, Japan not growing as fast as many had expected, only posting growth of 0.1% year on year for the second quarter of 2010. Many people are expecting some interesting housing numbers out of the US today. Some are even talking about the fact that perhaps China is going to overtake Japan as the world's second largest economy. So many factors to take into consideration on a global level, but really just pointing to one thing, David, it seems that we're just going to be seeing muted growth. And I'd also like to mention the fact that when you see Germany's growth that came through, it really proves that the likes of the euro and the weakening of the euro has actually been quite a good thing for exports in the European Union.
Yeah, of course, you know, the euro with this conglomeration of countries, Germany is looking very good. If you had to single out one, and perhaps France on an economic basis, not looking so bad. But then, of course, you have to look towards the periphery. Countries like Spain and Greece and Ireland, you know, they're not enjoying such good times at the moment, and I guess that's filtering through into the price of the euro. When one turns attention to Japan, that's a basket case for the last 2 decades, and the US is certainly looking anything but healthy at this point in time. They've got their own fiscal woes, and growth is in fact starting to slow there. The housing market is not looking great at all, and unemployment remains a problem. So from a pure macro perspective, it's hard for me, you know, just looking at the global scenario to justify the kind of valuations we're seeing in the equity market. And that's why I'm saying any nervousness that might filter through in that front, in fact, might have an impact on the rand. So I'd be loath to call the rand a lot stronger from here. But of course, the corollary to that is that interest rates globally are going to remain very low for an extended period of time. And with the liquidity that the central banks are piling into the system, that could find a way into emerging markets. So the picture is very unclear at the moment, but I'm erring towards the side of caution.